I'm Russ Mould, AJ Bell's Investment Director, and welcome to the latest edition of Fundamentals. This time around, I'll be looking at the third most popular fund on the AJ Bell Youinvest platform at the moment, namely AXA Framlington Biotech. This £537 million collectives mandate, well, it's made pretty clear by its name. Lead manager Lyndon Thompson seeks to provide long-term capital growth to investors in the fund, and it seeks to do so by putting their money to work across a portfolio of biotechnology, genomics and medical research companies. The fund dates back to 2001, although this particular class of share has only been available since 2012. If you're an income hunter, AXA Framlington Biotech may not be suitable for you, and you are going to need to be pretty risk tolerant if you are interested. The chart shows it has offered strong returns for holders over the last 4 years, but the graphic makes it equally clear returns can be volatile. The first few months of 2016 have also been particularly tough, although the fund did peak nearly 2 years ago. The portfolio is a concentrated one with just 54 holdings, and the top 10 positions represent some 60% of the assets. The list of largest holdings includes many names which will be familiar to those who've done their research on the biotech and healthcare industries. Key positions include neurological and autoimmune diseases giant Biogen, biotech behemoth Amgen, and cancer and inflammatories expert Celgene. You'll notice that all three of those firms are American, and the US represents 87% of the portfolio's assets. The rest can be found in the Eurozone and wider Europe, with a 2.7% weighting toward the UK and a smidgen in Canada. This particular share class is the accumulation version, so what dividends there are will be automatically reinvested upon payment every 6 months. By way of 2 final points, the fund is SIPP and ISA eligible, and it comes with an ongoing charge figure of 0.83%. So that's the mechanics. The question now is, why would your fellow investors be buying AXA Framlington Biotech today? And I think there are 3 possible reasons. First, global demographic trends point to greater longevity and growing populations, so demand for drugs could well only increase over time. Second, we still feel stuck in a low growth, low inflation, low interest rate world. Any company which can grow quickly and preferably organically has a strong competitive edge, and that which means it has pricing power, well, all of those facets mean they're likely to be highly prized. Many drug manufacturers fit the bill here, and there's also the hope that a drug developer will come up with a highly successful new treatment. Third, a wave of merger and acquisition, M&A activity still sweeping the industry as established larger firms seek to address holes in their drug portfolios or revitalise growth in their pipeline prospects by pouncing on the smaller ones. One top 10 holding in this fund, Illumina, has already fought off one hostile bid, and another, BioMarin, is regularly put up as a potential target for bigger drug firms. In addition, risk-tolerant investors may view the weakness in biotech stocks we've seen this year, and therefore the dip in the fund's performance, as a chance to get involved. Note, however, that sentiment towards the biotech sector overall has been hit for 3 further reasons. Some pharma firm takeovers were failed or were blocked by the regulator. US presidential candidate Hillary Clinton has threatened to investigate what she calls predatory drug pricing in the US, providing she wins in November. And also the share price of Valiant collapsed after a string of high-profile deals, a failed lunge for Allergan, and the accumulation of huge debts and, as yet unproven, allegations of creative accounting. This chart shows the 5-year share price of Valiant, and as you can see, it's not pretty. Bit of a fall from grace there for what had previously been a very popular stock. So you need to research all of these issues and the investment case for investing in the sector before you decide whether AXA Framlington Biotech fits your own personal investment goals, target returns, time horizon, and appetite for risk. So thank you for watching, and I look forward to seeing you next time.